A Cartier or a Rolex on your mind? Are you planning to splurge your money on buying the next luxury watch, handbag or shoes? Well, get ready to pay a little extra at checkout. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and in this video, we're going to be helping you understand what are the new rules that the tax department has come out with, because of which affording luxury will be a tad more expensive for all of you. India's tax department will now ensure that you pay higher taxes on your Chanel bags or Gucci shoes. The Central Board of Direct Taxes, that's the CBDT, has now announced a 1% TCS, that's tax collected at source, that will apply to all the luxury goods, but only if the price tag crosses the 10 lakh rupee mark. Well, this is the part of the budget proposal that is finally taking effect starting April 22nd. It is an advanced tax of sorts that actually shows up in your Form 26AS. Of course, it can be adjusted against your final income tax liability. So, for instance, if you have a zero tax liability and if you go ahead and buy a 10 lakh rupee luxury good, then the tax outgo will actually be nil. But in case you have a taxable income that you pay tax on, then the luxury goods TCS will get added on to your annual taxable income, and then you will have to pay the tax calculating both of those. Now, this rule aims to improve traceability and tax evasion. So, what exactly qualifies as luxury goods, you ask, which will now actually attract higher TCS or tax collected at source? Well, as per the CBDT's new notification, the list includes high-end wristwatches. So, keep an eye when you go ahead and buy that watch over 10 lakh rupees of a mark. Paintings, sculptures and antiques will also come under the luxury goods. There are also collectibles, coins or stamps worth over 10 lakhs can also attract you a 1% TCS now. Not just that, luxury handbags and even designer sunglasses. If you have been looking at a Tiffany over 10 lakh rupees, then beware, you may have to pay extra money there. Or if you're holding on to that LV bag, looking for that Birkin bag as well, you will have to pay a higher tax there. Designer footwears, any footwear over 10 lakh rupees will be considered a luxury good. And even premium sportswear, for some cases, even having expensive golf kits for yourself will also attract a higher tax now. Even owning a home theatre system that's upwards of 10 lakh rupees, well, you will have to pay 1% of extra TCS there. Horses used for racing or for polo will also have you pay a little extra money to the tax department now. Even owning a yacht or a helicopter, in case you are the super rich or the uber rich of India, then you will have to pay that 1% extra tax. In other words, items that actually scream lifestyle statement is something that will now cost you more. So, how does it really work in life? I will help you understand. Well, you go ahead and buy the designer handbag, an LV, a Chanel, a Birkin bag, an Hermes worth over say 12 lakh rupees. The seller will now collect 12,000 rupees on that 12 lakh rupees of a price tag, which is 1% of the sale value of that bag as TCS from you at the time of payment. And he will put that against your own PAN card with the tax department. Now, why this matters is that this move is aimed at tightening tax compliance, ensuring better tax tracking in the high-end spending segment. It is also a reminder that big purchases now come with a paper trail and a small government cut right at the source. But what if you do not furnish a PAN card? Well, you will have to pay an even steeper price on that account. There will be a steep 20% TCS which will be applicable, making anonymity even more costly, pushing buyers to ensure that you are tax compliant. So, before you swipe that card for your next big ticket indulgence, just know that the taxman is watching, not just with binoculars, but with that 1% extra clause. Stay tuned on to Business Today Television to find out such more interesting videos that we can continue to help you understand how things are changing and revolving around the tax changes in your life. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation that we are going to be